The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We are going to have Bill Meridian from Cycles Research of Vienna, Austria, on at in about 12 minutes, 10 minutes from now. I posted the first chart, which is the E-mini S&P. As you can see, we had a gap down really late Friday, right on the close, just as the markets were closing. We were down to the 21.46 level, and then last night we rallied up to the 78% retracement level. We are still, we'll cover the longer term picture in this after we have a chance to talk to Bill Meridian here in about 10 minutes. Now, there are a couple things have happened. It's really hard to believe here, folks, but here in Arizona, we've had a sniper in the city of Phoenix, which is about 120 miles north of us down into the deep desert. We're in the high desert because we're at 2,500 feet here in Tucson, but Phoenix has had a sniper where he's killed 7 people since July the 13th, and there is not one thing in the news about it. It's not been on anything. The only way you find out about it is on the internet. I don't know if they're doing that to keep people from being scared, but there is absolutely no news on it. And I think that's a pretty significant thing happening. Of course, not as significant as what's happening in other parts of the world, but it's still, quite amazing. Another thing that I believe is relatively important, and that is that we went to Olive Garden for dinner the other night because we like their unlimited salad and soup that they have, and they have these little games on the table now where you can order your food, and then they have games. I don't know what they call these games. I know it's not Pokemon because I just found out about that over the weekend. But they charge for that thing. I didn't believe it because when I got the bill, we questioned the $2 charge, and it was for playing the game on the table. So things are changing, as they say in the trade. One other thing that's happened, with this thing that's happened in Turkey with this failed coup, the Turkish 10-year note is yielding 0.6%. That's twice as much, or is half as much as we have in our own treasury notes and treasury bonds. And one other thing that I did hear over the weekend on the Bloomberg, I heard a economist, I didn't catch his name, but he said that this was no big deal having zero interest rates because they could keep issuing zero interest rates into infinity until things settle down and people could pay their bills. I couldn't believe that someone with an education would even say something like that, but that's what he did, so we'll see. Now, we've got a situation of the market that is really in trouble right now, one that I've been friendly to. I'm not friendly to it as of Friday, of course, because of the way that it acted, but the main thing here is if you'll take a look at the heating oil, we're breaking down below the 61% retracement now 3 times. We broke it on July 10th, we broke it on 13th, and we're breaking it again today. That sets up another price pattern down there at the 135 level in the spot heating oil. We still have crude oil is still above the 44.70, but it looks like it wants to fill. We're seeing the same thing in gasoline futures. We had a really nice rally in those off of the big ABCD pattern, and then we had a situation where we sold off quite a bit, not near the old lows yet, but we're still down around the 78% level of that time. We'll have Bill Meridian on in just a few minutes. I think they're going to be getting in touch with him, and as soon as they do, we'll have him on. Anyway, after we finish with after we get the information from Bill, we're going to look at some of these longer term patterns, and I'm going to go across the globe and show you some of the other markets that I see. Remember, this is all technical stuff, and it is really just lines and ratios and stuff like that. It's nothing to do with fundamentals, politics, military coups, or anything like that. It's just the reaction of how things are going. At that time. Just a second, I'm trying to do two things at once, which sometimes can be a little bit more of a thing that I can't. We will have Bill on here in about 3 or 4 minutes after we finish this first break. So that's the main thing, folks. The main thing to keep in mind here is this is the long-term weekly pattern in the New York Stock Exchange Index. And remember, we have a full moon due. We're in the full moon zone right now, 18th, 19th, and 20th. So anytime now, if this is correct, we should start down. Remember, we started up on the full moon of July 3rd, so we want to keep a close eye on that. So, okay. So anyway, watch this pattern. This is the New York Stock Exchange Index. It's the really long-term pattern that we're looking, and we'll see what's going to happen with this over this weekend. But we will have to see what's going on. Hold on here 1 second. I'm trying to contact Mr. Meridian, and then we will we'll start going, and we will get going here. Hopefully, we'll do one thing at a time to try to get it going. When you have a guest on, you've got to coordinate yourself with Skype and TFNN and also the guests. So it's not just a full moon thing. We'll see. Okay. Also, the big day is tomorrow, is July 19th, is my sister's birthday. She is the American equivalent of Mother Teresa. Carla is 4 years older than me, and she's in her 70s, of course, and she younger than me. Let's say it again, 4 years younger than me. And she goes to a nursing home unpaid every day and gives women that are in Alzheimer's care a bath. And she does this every single day for 2 hours a day. That to me, I mean, she's been doing that. Well, she was a nurse before she retired, but this woman is, she is the equivalent of Mother Teresa, that's for sure. She has never said a bad word in her life. I mean, not even the S word or anything even close to that. She is a real, she's a real holy person. Okay, let's get back to the real world. All right, we're taking a look into the New York Stock Exchange Index. We see the same thing in the S&P 500, but the difference is that if we get much higher than 2170 in this S&P futures, we could get all the way up to 2260. Who's to say that this thing, can't even, just go run to the moon? But that's neither here nor there. But we will have Bill Meridian on, hopefully at the break here, and then we will talk some more about this. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we have Bill Meridian from Cycles Research on the line. Bill, are you there?
I'm here, Larry.
Hey, listen, I want to compliment you for one of the most spectacular calls you gave us 6 weeks ago when you were on the show. You said that we would be cresting sometime in the middle of July, and we've had so many requests this past week to have you on. This is the reason. This was really an amazing call. So fire away. We've got your first two charts up. So why don't you go ahead and we'll just go one at a time, and we have a few questions at the end.
Sure. Well, just to begin, I look at the addition of the 1, 4, and 10-year cycles. I think I explained that last time. I think most of your listeners know what that is. But you'll note that I think what I said was that it would bottom in the last week of June. And you can see that green line at the bottom is the summation of the top three. So you can focus on the green line. And that we would run up from late June. And you see that little crest right there that we're at right now. That's July 20th. Mm-hmm. And you could see it better if you go to the graph. The graph below that, the blue line, is a blow up of that green summation line only for Q3. So you see we're in this little flat period here. So when we got to the, I was pretty sure that Britain would leave the EU just talking to people in London. There was just nobody in favor of it, number one. And number two, the market activity around that date was stocks down, gold and bonds up. And I said, well, that was a market confirmation of it. So that to me confirmed this turning point. And so now I was listening to what you said, by the way, and I have to agree with you. If you go down to the S&P chart, number 3. Sure. There's a breakout, and I agree with you. I mean, I'm seeing maybe, 50 points on the downside, S&P points. And if you count the height of this up, plain old technical analysis 101, you get a projection that's about 300 points higher. And that's, I'm not claiming that we're going to get this huge rally from here, but that's an excellent reward-risk ratio if you're a trader.
Indeed.
And if you go below that, you see the advanced decline line. You'll note that it's just hit a new high. And that actually led the market on the way up, and the stocks will follow the AD line. So that's a confirmation of it. Mm-hmm. And then if we go down, there's the monthly New York Stock Exchange advanced decline line. That's at a new high. So in terms of technical analysis, there's no reason to be bearish right here if you're just looking at plain technical analysis. Of course, if you add in It's that old saying, if you're climbing a mountain, don't look down, because the fundamentals, the fundamentals, it just seems out of whack here, because the S&P is reporting what, 6 consecutive quarters of declining earnings. But what they failed to miss is the Austrian principle that they keep cranking liquidity into the system. Excuse me. They keep cranking it into the system when there's no real need. And the result is all of that money is finding its way into other things, like it was into artwork. Art is now coming apart, but it's going into bonds, it's going into stocks, it's going into gold, it's going into real estate, which are known as Cantillon effects. And at this low level of interest rates, a PE ratio of 2021 is normal, according to some of the research I've seen. So that's the case with the stock market. And with bonds, the turning points for some reason have been working exceptionally well. And I had a turning point over the weekend, and you'll see that bonds corrected 50% of their last rally. So I would expect bonds to go higher now into the 27th.
That makes sense, because they did correct. They went from 177 down to 171 in the September bonds, which was a pretty big week to the downside, given all the stuff that was going on in the world.
But so that's the current market outlook, but I'll be sending you a more extensive report, because I now have, we're at the economy and the crisis of 2017. And of course, as you know, and as I'm sure everybody out there realizes, we don't believe the numbers the government hands us about the economy. If you look at shadow stats, or if you look at the inflation index I presented some months ago, inflation is much worse, the economy is much slower. I think everybody knows that. And I've been using the business activity as a sign of a weakening economy. That has been declining. It started declining in Q3 or 4 last year, and the economy has weakened. But 2017 is a year ending in a 7. And as we know from the decennial pattern, that years ending at 7 tend to almost always bring crises. That's number one. And number two, the panic cycle, which we see down here, is also hitting a high. Now that might be new to some people. I went back to 1600 by month, and I went through all of my source material, and I coded the months in a binary language, 1 for a normal month and 2 for a crisis month. And I had to make a definition of crises and all that. But as you'll notice, it starts to turn up, and it peaks in September of 2017. And one of the pieces of information that fell out of this analysis was that 25 to 30% of all crisis months occur in the autumn of years ending in 7 or 8, which 2017 will be. And here we have a year ending in 7. We have the panic cycle hitting a high. And on top of that, if you're a believer in astrology, in the U.S. chart, Saturn hits the Mars-Neptune square in the USA national horoscope. Now, whenever that has happened, my old friend Robert Gover wrote a book in which he just made this one point. Whenever that has happened, you've had some sort of a deflationary crisis. So you've got 3 reasons to look for a crisis next year. And I think that when that occurs, as I've said before, there's a rule of alternation. One of them comes from our old friend Marty Armstrong, and the other one from Charlie Kirkpatrick. And from Armstrong, crises tend to be in the public sector, and then the next crisis in the private sector. So the 1920s was in the private sector, 1930s. And from Kirkpatrick, they tend to occur in different asset classes. So in other words, if stocks and bonds, if stocks got clobbered and real estate got clobbered in 07, 08, they're not going to get clobbered this time. They'll go down, but they'll go down less than any other asset class. So if you own real estate, I think you should simply hold on to what you have. Stocks, I think the first correction, now going back to my 1-4 10-year cycle, stocks will run up in Q4. So sometime next year, then they'll correct for the first time. I think that'll be it for stocks. I don't think they'll suffer that much, and will be a great buy somewhere in 2017. But I do think private equity, bonds, and art will all get hit. And one of the signs, this comes from somebody's PhD thesis, which a series of lectures they made into a booklet. He points out that as you get closer to the top, the different asset classes that have been going up, suddenly one of them starts to falter. And that started with artwork. I've mentioned this every time I'm on your show, but 1/3 of all art galleries are now not reporting they're not making any profit. And last autumn, the prices of the masterpieces soared way ahead of the regular artwork. Well, now the masterpieces are not drawing the prices that are expected at auction. So I just had dinner with my friend's become a well-known sculptor here in New York, and she reported, that's right, her business is just dead. So that's one of the areas. Private equity, I'm not too sure how to measure. But this is why we're getting real estate appreciating, and we're getting the artwork disintegrating. But most people don't buy art and don't know about it.
We got to
so
take a break here, Bill.
Yep.
Stay with us, Bill. We'll be right back, okay?
Okay.
Thank you. Okay, Bill Meridian, Cycles Research.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back talking with Bill Meridian of Cycles Research out of Vienna, Austria. Bill, we've had a couple questions
Sure.
about a couple specific markets here. First of all, the crude oil market. What's your feeling, and what are you hearing from your friends in Saudi Arabia?
Well, I have friends every place but Saudi Arabia in the Middle East. Anyway,
I know
the longer-term oil cycle bottoms in the second half of August. And originally, when I was on your show, I thought oil had bottomed because the short-term cycles had turned up, and I thought the technical situation plus the short-term cycles was enough to overcome this downswing in the cycle. That was incorrect. So I think oil is in a trading range between 44 and 48 until the third week of August or so. And then I think it heads higher. And as for the Middle East, they are a perfect contrary indicator, because I was in Algiers and I was in Abu Dhabi. And everybody there is bearish. I mean, the oil company announced layoffs of 2,500 people, and every men's store had 70 to 90% off sales, and they always react late, always. And so everyone said, I said, what are you guys looking to invest in? Right now, we don't, with the low oil prices, we don't want to do anything. And, I've known these guys since 1990, and they're always late on these things. Mm-hmm. So that is a bullish indication.
Okay, the next one, of course, is the precious metals. What's your feeling on the gold and silver?
Well, gold and silver, I'm basically bullish, because if you look at an annual chart, there's a low in June and a low in August, and the single most bullish time to own gold is between June and the middle of October, and we're right in that time period. And I didn't mention it, but in connection with the panic cycle, it's an important point, but the banks, for example, in Italy, have loaned themselves into a crisis. This is the way all of these crises work. I don't know why people can't see this, but as an alternative, I feel people are going to gold as a currency. They're going to gold because they're, again, afraid the banking system is going to fail. The panic cycle is rising. And so I wanted to make a point, and that is, people would say to me, I mean, in Abu Dhabi, they said, Bill, you're doing technology, it's up so much. Isn't this a bubble? I said, yeah, it was a bubble last year, a bubble this year, it'll be a bubble next year. Well, doesn't that give you cause for concern? I said, it gives me cause for concern when the bubble bursts. And they said, well, when do you think that is? I said, years ending in zero, the decennial pattern, is 2000. So if the situation fundamentally is so bad, why hasn't there been a panic 2 months ago, last month, right now? Because most panics occur in years ending in 7. It's just not the time yet. But all the fundamentals, it's like the dock, the wood the dock is made out of has rotted, but we haven't fallen through yet.
Mm-hmm. It makes really good sense, and you're seeing it in especially some of these technology stocks like Pokemon, up 50%, overnight. That's a tremendous move. And I don't even know what Pokemon is. Anyway, Bill, we have one other question about the Treasury bond market. What is your feeling about bonds and notes, and the fact that this quantitative easing and stuff?
Well, the annual low in any year it averages out to June 22nd. Last year, 1 year ago, 2015, it was actually June 26th. So look at the move bonds have made since the second half of June. So you're right at the annual low. So if I had bonds, I would tend to hold them. Mm-hmm. I start to become concerned when the price action starts to significantly deviate from the annual cycle. If you see that means a bigger cycle's coming in. But at the moment, I don't see that.
Okay.
And, as I say to everybody, you're playing against the house. The house is the government and the central banks. And they want borrowing costs to stay low. So do you think they're going to let rates trade up? Do you think they're going to let bonds go down? Do you think they're going to put themselves in a worse situation? So they control the house, and but sooner or later, and I think it's next year, the market forces will take over.
Okay, we've got a caller from Chicago. Ariva's calling in. Ariva, are you there?
Yes, I am.
Hello.
Go ahead and ask Bill your question.
Bill, I know you talked about 2017 crash cycle, but what about this year? They won't even let S&P fall 5 points. And there are all these gaps, so what, it'll keep on going up?
Yeah,
in 2016?
I think we have one more correction to come. If we go back to the 1, 4, and 10-year cycle, it shows a high in late August or early September and a sharp drop. In other words, that period from late August into, let's say, early October will be like January was and like June was. And then that'll be it. That'll be the last correction of the year. And 2 years in a row, I've said that fund managers can take the entire year off and just go long in the fourth quarter of the year. And that would have worked out last year, and I think that'll work this year. So stocks are going higher in Q4.
Oh. So there'll be one drop after early September to whatever, and then...
Late August to early October, and then I think it's up into next year.
Okay, thank you.
You're welcome.
Okay, Bill, one other question that we had,
Sure.
and then I let you go because I know your time's really short today. The election, what is it showing now between our two candidates?
Well, I'll tell you, usually, for example, it's a question of a comparison between two horoscopes. And usually so in other words, they could both be very well aspected. It's just the person who's better aspected will win. Well, this time, both of them look dreadful. And I've come to the conclusion, they do. I mean, both of them look dreadful, and I've come to the conclusion that Trump's is less dreadful. And let me just say that my overall feeling from talking to people is they're not only angry that the Republicans haven't fixed anything after they elected them, they're frightened of what their children are learning in school and the way they see the economy going, and they're releasing people out of the prisons, and they're saying, well, these people didn't do very much, but those are plea bargained charges. They've been pleaded down from something else. They're letting them go on the streets. They're not getting control of the borders, and they're trying to take away your right to defend yourself by restricting the Second Amendment. People are frightened. So that tells me they've had it. And Brexit, look what just happened. They didn't believe all of the usual government propaganda, and they voted with their hearts. That's number one. But it's mighty. I had said that the FBI would not indict Hillary, but the worst-looking horoscope in that group is FBI Director Comey, and I do believe he is going to be under such pressure he's going to step down somewhere like September, October, and somewhere in that time period. And the October eclipse, the lunar eclipse, is exactly opposite Bill Clinton's sun to the degree and the minute. The orb is 0000. And as I said, early in life and late in life, eclipses to your sun are usually your health. And so I think he may suffer a health crisis, and that's Hillary's horoscope does not look good for September. And originally I thought, well, gee, could the FBI investigation stretch out that long? I think perhaps there's going to be some problem with President Bill. But Larry, you remember that long business activity index graph that I sent to you?
Yes.
I had said, people said, well, why is Bill, your business activity index is flat for like 8 or 10 years. Why would that be? I said, because they'll elect a government that is not friendly toward free enterprise, which has happened. Yeah. And, well, why is it going to go straight up at the end of 2017? I said, well, first, the Republicans will win the midterm election. I said, they're going to elect somebody who's Reagan-like.
Yeah. Bill, we got to run. Thanks for joining us, my friend.
Always nice to talk to you, Larry.
Oh, it's good to have you on, buddy. Bill Meridian, Cycles Research.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks. Well, that was certainly interesting having him on. Bill Meridian of Cycles Research. Boy, he's really got some good information for us, which is great. All right, the next thing we're going to talk about here is the short-term stuff. We're going to take a look, because we've got this full moon coming in today or tomorrow. Actually, the actual date of it is the 19th. As you can see here, we're looking at the wheat market selling off. The old low was down at around the 416 level. We're trading around 421 right now. I believe we're going to take this low out here, and we could get as low as around 402. So just setting this up, we just start to look for it. That's all I'm saying, because the wheat is one of the more accurate lunar cycle things that we have. This goes back to the Babylonians and Sumerians when they used to have the lunar cycles on tablets. This was reported by Dr. Andrew Lowe in his book, The Evolution of Technical Analysis. So we do watch that 14-day cycle very closely, and then what we do is we try to match the ratios to what we're looking at. But this is not for today. It'll be tomorrow. If you're a day late, it's still okay, because then you'll know that the cycle is in and in effect. Now, in the soybean market, we've had a request to talk a little bit about that, and that is that we've given back all of the gains that we made after we hit that ABCD pattern that Norm Winsky pointed out at the 1020 level, and we came all the way back. Now we're trading around 1035, so we've given almost that back, and it's really not a very, very bullish sign. And we're also, selling off in corn a little bit too, but that's not until tomorrow. We'll watch that one very closely for tomorrow. Right now, the focus is on the crude oil, because that oil complex is weakening, and that's not a good sign. And that's one of the reasons I wanted to keep in mind of what we're doing here. Now, quickly, I wanted to go across the globe here and show you some of these stock markets that everybody's talking about, how bullish they are. The first one is on a holiday. That's Marine Day in Japan. As you can see, we're in a very strong downtrend day. Even though we've been up for the past 5 weeks, this is still a very strong trending market to the downside. If we look at the Hang Seng, we're seeing the same thing. It looks a little bit better, of course, but still is in a very, very long-term bear market, and just making another ABCD correction to the upside. If we move another about 500 to 1,000 miles away from Hong Kong, we'll get into the Chinese market, and here you can see that we are looking at a perfect 61% retracement and a Gartley pattern that is formed up here in the Chinese market. Now, should we go across the pond here into Germany, we're going to see pretty much the same type of a situation here, where we have the 135 pattern. we got all the way up this morning early. Germany was very strong, and it gave it all back very, very quickly. It was up about 100 points in Germany, and then gave it back in a matter of about 10 minutes. I mean, it was just up and down really, really fast, and then it proceeded to go lower. But this is the same pattern, this 135 lower top pattern that we've seen. And remember, the high in this thing was way back, wow, I think it was around 13,000. So it's not even anywhere near making a breakout pattern that they're telling us about in the news, of course. And then if we take a look at the ETF for the European major market, of course, is the London stock market. You'll notice that we're not even anywhere close to the highs that we made in May or June at all. All we're doing is making a 61% retracement back there on the FTSE. So what they're telling you in the market is just really not the same as what we're seeing in the charts. Now, there's one market that I really like, of course, and you folks know that that's the gold market, and I'd really, really like to see this gold get down to the 1,300 level. What we're doing now is we're just testing those levels. If this gets above 1,350, in the August gold, that means this pattern is just not going to complete, because it's got such a beautiful ABCD pattern set up at 1,300. We've already rallied, $12 off the low today, but that's neither here nor there. We need to, if for this pattern to fail that I just posted in here, you need to get gold to be above 1,350. If gold gets above 1,350, that tells us that this was nothing more than a 5-day correction from 9-day correction between the 6th and the 15th, and then we'll probably continue to go higher. Silver is acting very, very bullish, folks. It just doesn't want to give up very much at all, these are positive signs for the long term, but we're still looking at. The one thing that makes me concerned is if you look at the, and we've seen these long-term charts in silver and gold last week. We did that quite a bit, showing you the 382 retracements and stuff, and that is significant highs. But if you look at platinum here, we've made a 61% retracement from the high of 2.5 years ago, and we also made a 38% retracement of the high from 2014. So, and there was a nice ABCD pattern from March through July also. So that should tell us that these precious metals should be under some more selling, but they're not coming down quickly. That tells you there's a lot of people standing in line wanting to buy this stuff. So that could be really good information. One of the things that I want to mention here is the Bradley model. I'm going to talk about it now, and I'll continue on with it later. This is the Bradley model can have a lot. I covered this in the newsletter rather extensively, but if you will take a look at this, this is from another gentleman who's a financial astrologer in Santa Barbara, California, and he has a different Bradley model than the one I use. I use a standard Bradley model. Norm Winsky uses his own model, and what they do is that they weight these planets a little differently. They give Mercury a heavier weight than they do Saturn or Uranus or something like that. They use the inner planets more for weighting, and that's what does it. Now, but if you looked at this from a standpoint of what our Bradley model did, if you'll notice that January 6th date, you'll see that was right near the bottom of the market, but it went straight up from January 6th. There was very little pullback into March 11th. As you can see, the real low was January 6th. So that leads us to the point of whether we're going to be doing this. But what this forecast is saying is pretty much what we're looking at, and what Bill Meridian was talking about pretty much was from July to October, we could have a pretty good correction here, before we actually move higher. So we'll have to wait and see if this is going to be the case. But that's what happens with the Bradley, is you get so many variations. I think there must be 20 of them on the internet, and that happens because they weight the planets differently. I did not change the weighting of the planets at all. They were just the same way that the gentleman, the PhD in astrophysics from Yale University, set the positive and negative valences for. We just used them right out of Bradley's book, and the folks at Ensign Software, built the program We had it tested several times, and it is the correct way to look at it, but that's just one way of looking at it, and that's all it is. It's just a guideline. I believe that you really need the patterns and the ratios, to try to fulfill where you're supposed to be at any time. We'll take a little break here, 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we're going to take a quick look at the NASDAQ. As you can see, we took out the high of April by just a couple of points, and now we've started to back off again in the NASDAQ. This had been the leader all the way up, and whether this means much as far as a downturn, we'll have to wait and see. But the pattern that you really want to focus on is that 1, 2, 3, 4, 5 expanding triangle. We're seeing that everywhere in the S&P Cash, New York Stock Exchange Index. We're also seeing it in the IWM on a smaller time frame on a daily basis. We're also seeing it in the Dow Jones Industrial Average. The utilities appear to have topped at that level we were looking at just a few weeks ago. And we had a 6-point drop in Treasury bonds. It was one of our biggest down weeks in bonds over the past year or so, coming in at a time when it should have been very, very bullish, given the news. So whether that has an effect on this or not, we'll have to be careful. But we'll watch that very, very carefully also. Remember, the wheat is not due until tomorrow, so you've got to give it a little bit of time. I'm going to cover that a little more extensively tomorrow, just to take a look at it, because wheat is one of the better things to trade. We'll look at wheat and beans and corn tomorrow to see what and we've had tremendously wonderful weather in the grain belt, as Rich Anderson pointed out to us on Friday. There was really a greenhouse effect, that it was just about as perfect as it could possibly be. It was warm, sometimes hot, but there was water coming in, so it was a perfect growing time for the beans. And believe me, we're in the middle of July now, so the corn is as high as an elephant's eye. So we're getting ready to complete these crops here. However, soybeans, the critical period for soybeans are the first 3 weeks of August. So things can really go strange in that market in August, as Rich has pointed out to us several times. In regards to the currency, the dollar looks very strong, folks. That means a weaker euro, weaker pound, weaker yen. I mean, that's the way it looks, looking at the charts. The Australian dollar is also in the sell zone. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.